Imagine waking up to see your entire portfolio bleeding red while the rest of the world is on holiday. That is the reality this Monday. The Nasdaq is plunging, the S&P 500 futures are in a free fall, and gold is defying gravity, screaming past $4,600 an ounce. But this isn't just another dip. This is triggered by a headline so bizarre it sounds like a political thriller script gone wrong. President Trump has just ignited a firestorm by threatening a 10% tariff on Denmark and 8 other major European allies over Greenland. Is this the start of a global economic collapse, or is Wall Street playing a massive psychological game while the cash market is closed? Let's break down the madness. It started when Denmark refused to discuss the sale of Greenland. Trump's response? A total trade declaration of war. We are talking about 10% tariffs hitting Germany, France, and the UK. These are America's closest allies, now caught in the crosshairs of real estate. The European Union isn't backing down either. They are already prepping a €93 billion retaliation package targeting iconic American brands and goods. This kind of unpredictability is exactly what institutional investors hate. When the rules of global trade are weaponized over territory, the market panics. But there's a massive catch you need to understand. Today is a federal holiday in the US. The actual New York Stock Exchange is shut. What you are seeing right now is low liquidity futures trading. In this thin environment, it doesn't take much volume to move the needle violently. This is the perfect breeding ground for a bear trap. Manipulators love holidays because they can trigger your stop losses with half the effort. Think about it. If you were a hedge fund looking to buy high-quality tech stocks at a discount, wouldn't you want a massive panic first? But we also have to respect the real risks. The Federal Reserve is currently in a state of flux with the transition of the chairmanship. If this trade war sparks inflation, the Fed might be forced to keep rates higher for longer, killing any hopes of a market-saving pivot. It's a toxic cocktail of geopolitical ego and monetary uncertainty. So how do you stay on the right side of this trade? Don't trade on emotions. Trade on the levels. I've done the math on the E-mini S&P 500 futures, and 2 numbers stand out. The first line in the sand is 6866.75. This is your immediate support and the key to the short-term trend. If we open on Tuesday and the price holds this level, today was just a holiday shakeout. It's a massive signal that the bulls are still in control. However, if we fail to reclaim 6866.75, things get ugly. We then look toward our ultimate line of defense, 6771.5. Mark this number down, 6771.5. This is your get out of jail card. This is where the narrative shifts from dip to crash. If the S&P 500 closes below 6771.5 on Tuesday, the structure of this market is broken. We are no longer buying the dip. My personal game plan is simple. If we break that 6771.5 level, I am de-risking aggressively and moving to the sidelines. Tomorrow morning at the opening bell, I'll be watching the volume. We need to see if the big institutions are actually selling or just waiting. Check the generals. NVDA and Apple are the heart of this market. If they fail to find buyers at support, the rest of the market will follow. Also, keep an eye on the VIX. If the fear gauge spikes above 30, we are entering a zone of extreme panic that often precedes a bottom. The Greenland Tariff might sound like a joke, but the impact on your brokerage account is very real. Don't be the retail trader who gets liquidated. Stay disciplined, stick to the numbers, 6866.75 and 6771.5. They are your only protection in this chaos. What's your move? Are you buying this dip or waiting for a deeper drop? Drop a comment below and let's discuss the strategy. Don't forget to smash that like button and subscribe for emergency updates. Stay safe, and I'll see you at the bell.